Hi, everyone. I'm Rick Bensignor. Today is Tuesday, September 21st, and welcome to this week's In the Know Trader show. Well, certainly a lot has gone on in the markets in the last day or so. Yes, the Dow was down significantly, as was the S&P, NASDAQ, and everything, as markets finally got spooked. And because of that, we're going to go very rapidly through today's show. By doing something we did 2 months ago. We got great feedback on it, and I think it's an apropos time to do it again, which is to spend the entire show kind of looking at the Dow and then going through the 30 names in 30 minutes that comprise the Dow. So we're going to get through every name one way or another in the next 30 minutes. So just a little housekeeping: to get my weekly tactical trader report that generally comes out Thursday nights, or to get the 7-11 monthly spider sector report that comes out on the last day of each month, go to intheknowtrader.com. As I mentioned, I think last week and the week before, we are rebuilding the website. It is hopefully going to be launched within two weeks, hopefully. And it'll be all brand new with lots of things, and so you'll enjoy that. But in the meantime, you can still go to the one that's up there, intheknowtrader.com, to sign up to become a subscriber. And there's a huge advantage to being a subscriber, because our readers know what our call was in the market, how we got very negative, and look for a call this decline. And that's the advantage of being a subscriber. My email, rick@intheknowtrader.com. Let's just quickly take a look at the macro sector relative results. You see that real estate has gone now and become the best performer, slightly ahead of energy on the year. Nonetheless, I still like energy. It's a sector I upgraded about, 3 weeks ago, give or take, maybe a month ago, kind of right on the bottom of relative underperformance. And hopefully now it kicks back in to being an outperformer. All right, so we're going to go right into the charts. We're going to start with the Dow Industrials. This is a weekly chart of them. This is the actual Dow Jones Industrial Average. What is significant that I see on the charts? First, we did break this trend line here, the closest one this week. You can see this is real time. In fact, let's even blow this up more so that we can really see what's going on. So you can see that price not only broke that line, and I'm trying to think why I have this line here, so I'm taking it away. But you'll also notice that this week's low from yesterday pretty much came to the TDST line, the lowest low in the most recent 9 count up. That's this red dotted line here at 32,742. So we're in between, a trend line that broke down and some support. To me, the most important thing I see, and any good technician should spot this fairly quickly, when, if we look at this chart and put it back to the size it was, and here kind of take a look from the lows in March 2020, when I look at this, the first thing that jumps out at me is the fact that this green trend line, this kind of dark purple trend line, and the propulsion level, which you guys wouldn't have on your charts, but even these two lines kind of come together. The two trend lines come together. And in this case, all three come together just about at 32,800, give or take a little over the next week or two. So we know that if we take out Monday's low, this is the next kind of substantial level of support. You've got multiple trend lines coming in, plus an unrelated level that all happen to be just about the same. So that's important to know. And so you've got these, the beginnings of what certainly looks like could be a rolling top here. And what I've told clients is that I think from now to year end, we probably go sideways to a little lower. Even if we make a slightly new high, it's not going to last. And I suspect that, we kind of are in for a few months of back and forth, but with a little bit of a negative bias there. Okay. Let me show you the diamonds, because this is how you can actually trade the Dow. So here's the weekly chart, and I've added the cloud chart to it. And also what's important, looking at the cloud chart. So I took those other trend lines away, but notice that since the bottom was made in 2020, the pullback that we had here held above the baseline, which is this orange colored line from the cloud chart. And the whole way up, we've been above this level. However, this week, we have broken it. Now, the week's still early in the week. It's only Tuesday, but we are trading beneath 342.78, which is the value of that level. And a week or two closing underneath there gets me down to this 328 level, which is pretty much the same propulsion level we told you, which was 32.792. So, you know, this very much can come into play. MACD is negative. It's broadened out in the sense that it's spread apart even further. So yeah, I am concerned that we've got kind of a topping type of indication here, and whether or not, again, the all-time high stays the all-time high, even if this turns around and makes it a higher high, I don't think all that will do is, what I think it'll do is knock out trading shorts, but we're not going to substantially progress beyond there this year. Okay, so now let's take a look at the components, the actual 30 components. We've got 22 minutes left or so. So let's cook through these and we'll get you to everything here. Here's Apple on the weekly chart. All these charts are going to have these three moving averages up: 50-week moving average, 100-week moving average, 200-week moving average. So look, we've got a 13 and 9, a slight new high that pulled back. So that's a little concerning for a near-term top. Putting the cloud in here too shows us where the top of the cloud for the next few weeks is pretty similar to where the TDST line is. So I do think that this is, you know, again, kind of most likely a near-term top, and this can fade back. MACD is just barely crossing underneath here. Also notice, by the way, 3 drives higher each time we made. So here was the all-time high back in summer of 2020. We pull back, we make a higher high. We pull back, we make a higher high. MACD doing the exact opposite, lower highs since, right? Big divergence. So I think this is certainly going to get a decent rest. And potential pullback. Microsoft, stronger, is has today this week's low propulsion momentum level on the downside. It would be qualified if we closed underneath that level of 281.30 this week. So far, we're bouncing. We're still holding even above the conversion line from the cloud chart, the pink line. So this is a stronger chart, but I'm still in. I don't think Microsoft's going to fly when everything else pulls back. So it's the same type thing. If you want to take profits or partial profits, you certainly can. Obviously, you're paying taxes unless it's in an IRA type account. That's the thing you have to deal with. Visa topped on weekly 9. It's been selling off. Look for this. So here we're right on the 50-week moving average, obviously very close to what a 200-day would be. Level down here for first support is 212.5. We're on a weekly 7. So over the next couple of weeks, we'll probably finish out this 9 count. At that point, then you can determine if you want to add or where we are relative to that. JP Morgan peaked right near a weekly 13, but going sideways for months, has never properly broken this propulsion level. That level is at 151.39 on a Friday close. If we close underneath it this week and then gap lower next week and made lower low, lower close, that would then be somewhat negative. You've got a 50-week moving average coming up here, but this has been above and beneath so many times, I wouldn't really give much credence to the moving averages. I'd look more at the level I just mentioned, as well as on the downside, all the way down at 135 if this got much worse. On the upside, if we make it an all-time high, look for 172 to be the top. J&J, 13.9 top here over the last couple of months, pull back, holding the TDST level right now. This too has been above and beneath. So the moving averages don't quite mean as much to me, but this week's low right now is the 50-week moving average. So again, that's just about the 200-day moving average. Support underneath here at around 158 to am I reading that right now? Yeah, 158 to 157 or so, and then the bottom of the cloud at 153. That'll carry you all the way through the end of the year. What do we have next? Walmart. Notice a stock like this has been mostly above its moving averages, very different than some of these other choppy ones. Been sideways, double top in Walmart. You can see here. So there's your double top from last year and this summer. Still healthy though, moving averages are all positively sloped, which is good. Still, I'd expect some sideways here. Big longer term key support is at 127 and change. That's where the lagging line would hit the bottom of the cloud. Getting beneath that would probably be negative. What's next? UNH. UNH even stronger. Look how much farther above the 3 moving averages you are. This made a new high about a month ago, still holding on to its first first support level at 401 and change. Anywhere from kind of the mid 390s to the low 400s is support. On the upside, if this makes a new high, look for potential targets at 440 and 446.5. Procter and Gamble. This peaked back here, and we've come and tested again last week. So this is also kind of close to making a new high, just equaled it last week. 13.9 top, defensive type name, obviously, big laggard over time. Anything in the consumer staples area is going to be a huge laggard, but on an outright basis, this is better than most stocks as far as relative to its highs. Moving averages are all positively sloped, though the 50 is starting to flatten out. On the downside, notice 2 things come together here at about 139-ish or so. Beneath there, 136 and high change is next level of support. Home Depot. Not far from all-time highs. Positively sloped moving averages, spread apart. It's all kind of bullish longer term. Pull back, look for support around 320, low 320s. It's at 335-ish right now. That's where your support is. One of the few names I think that we've seen right now that's actually in a current setup higher. So this is relatively better than most of the names that we looked at from a chart perspective. Disney peaked a long time ago, months ago, 6 months ago or more, something like that, back in March. There has been going really sideways since. I'd look for support here, 50-week moving average and the top of the cloud. So if you pull back towards the low 170s, only $8 lower, so there should be some support there. And then it's a whole different story. If you take out this low under 167 from May, then you could get all the way down towards the bottom of the cloud if this turned around to the downside. On the upside, resistance now 196 and 209.5 or so, if this ends up making new all-time highs. Nike, good moving average, slopes and spread. However, MACD has crossed negatively, 13.9 kind of combination type top here. We are beneath the propulsion momentum level. It is qualified. It said we'd get down to 151. This week's low, 152, pretty darn close. So there is some support right around here. Second support level would be near 143 to the top of the cloud at 134. That's the story there. What's next? Coca-Cola. Okay, so this totally different story. Peaked early 2020. Got mushed like every stock, recovered, and never got back up past what's the high we got here, the propulsion exhaustion level here in blue at 57 and change, now 54 and change. I've got no real vig or advantage playing this until it gets down on the long side until about 50.17, something like that, where the TDST line is. Otherwise, in here, I'm not going to rely that the 50-week moving average does anything. 100-week and 200-week are fairly flat. I'd say this still can pull back. MACD's gone negative, not a name I'm going to go after without it pulling back more. Verizon, one of the weaker names we've seen, however, on a TDST line here and very close to where we bottomed. There's one low from last summer, and here's the low from earlier this year. So there is some support here now. Interesting, we're on an 8 and a 9 on the downside towards a 13. So I'd probably wait to see if this makes a 13 over the next month or so. Yeah, there is some support here, but I don't know if it's enough to bet against it. It all depends on how much more you think the market can go down. And I don't think yesterday's one-day sell-off is likely the bottom, but I do think that the next couple of months we're going to see a lot of back and forth. CSCO, 13 and 9 kind of type top thing here too. Pulled back, look for 53.80 as next level down. 53.80 to 52.73 is kind of the important near-term support. Beneath that opens the door for a bigger decline into the upper 40s. Not sure really what I do here if I'm looking at this right. So here were the old all-time highs. We're back beneath that, so we made a new incremental high and have pulled back. Not loving that. At this point, you could easily see resistance where those old highs were at 58.25. So it wouldn't surprise me if this pulls back more too. If it turns around and makes new highs, 63 and change is probably as good as this is going to get. What do we have next? Intel, big, wide, easiest thing I can see here. I'm going to take the cloud away because it's meaningless on this chart. Really, what you got here is, you know, a big trade. In fact, I could even take this back to there. That's kind of your trading range. Pretty easy. In fact, you can even take it back farther to here. So you're smack in the middle of the trading range. The only thing you have to work with is the 9 count. I don't know if I was looking to buy maybe down at 49 or something like that. But this is a name. How many names do we have where we're getting close to buying getting a MACD buy signal? I don't think there's a rush to come into this, but I'd kind of say it's range bound, and I'd rather go after it maybe 8% lower if that opportunity comes. CRM. All right, so Salesforce, same thing in the sense that this topped last year somewhere around there. We've had bottoms somewhere around there. So that's your trading range. You're near the upper end. You are at least temporarily holding the propulsion down level that if you properly break underneath would suggest another $20 lower move. So far it's holding. So a decent name, but new highs, I only would expect a minimal new high at 286. And right now that's for the foreseeable future, that's as good as probably it's going to get. I don't see these coming into play with what I'm expecting from the market. So the key levels right now are 254 and 233. 233 and change. Merck. Okay, beneath its 200-week moving average after bouncing several times there. We did at least stop at a propulsion full exhaustion level this week. Excuse me, here's your 2020 low that week. The close of the week of making the 2020 low was right here. That's where we're holding. So this is what Tom DeMark would call the magnet price. This is important support. Underneath here, you just don't know what you're going to be dealing with. Big round kind of distributive top. You've got 2 moving averages that are actually negatively sloped. Not a particularly great name. Traders may want to lean against this area down here in the low 70s for a bounce, but it better hold in here. CVX, Chevron. All right, so here you've got a flat 200, a downward sloping 100, and upward sloping 50 week. This is typically the sign of a complete mishmash when it comes to defining trend, and you can see how difficult it really is. And looking at the trend, of course, I can draw an uptrend line from the March low of last year, but this is kind of, I don't know, I put this in a triangular pattern, something like that, and those dark purple lines, tough call here. It is at least holding some support. It's the second time down here at 92.5 over the last few weeks, but if it breaks, it's going to the trend line. And there is this big unfilled gap, which I hope it doesn't see because this is a name I'm long myself. McDonald's near all-time highs, one of the better looking charts. This trend line from the lows broke, but I guess looks like this probably held. Let's see. Yeah, so we're still above there. Notice again the confluence of multiple unrelated type indicators that are all showing up down into this range in the 225 and kind of lower. So if we pulled back, that's where you'd expect it to hold. If this makes new highs, look for 253 and change to potentially take some off the table. Honeywell, right on the 50-week moving average on a 6 count. If this breaks, we'll probably finish out the full 9 count to the downside over the next few weeks. If that coincides with lows in here, near 200, that's a better place to come and be a buyer. Otherwise, you'd have, you've gone nowhere for months. It'd be interesting to see whether or not this area holds or not. AMGN, weekly 9 count. So this is the first one we've seen that's actually been down. Now, what's that 9 count mean? 9 consecutive Fridays that the close on Friday is less than the close from 4 Fridays prior. That's often a turning point. You saw it here near the top. You saw it here near the bottom. Now it's doing it again, right along this 200. So here you've got 200-week moving average called the low in 19, called the low in 20, and here you are again. Defensive type name, obviously, in the healthcare sector, something you could consider doing some buying on. This is the first time we've gotten something that's, as far down as the 200-week with a DeMark signal that possibly matches with it. And yes, you're bottom fishing if you go for this, but that's how you get ahead of the game if it works. American Express, just a near-term kind of wedge pattern off of a declining flag pattern here, off of the high. Support down here, again, confluence, 1, 2, 3 different things all coming together down here at 142. If you're long, you don't really want to see it get down there, but if you're looking to get long, that's probably the place to do it. Boeing, so Boeing's high, we all know, was in early 2020. So let's see, that trend line, well, it broke, so the trend line had to be redrawn because of the spike up here. Tough call here. Let's see, and you did just break the last couple of weeks of breaking underneath the uptrend line from the 2020 low. I'd look for this to probably get at 189, and if the name is still a good name, that's probably where it's going to bottom. If it's a bad name, it goes all the way back to the 2020 lows. We don't want to see that for lots of reasons, regardless if you own it or not. You don't want to see Boeing go there. Here you've got the confluence of 3 moving averages coming together. And when you've got 3 long-term moving averages where 2 of them are flat like this, that clearly tells you, if you know anything about if you understand what a moving average is, it tells you there is no trend. And if you just pull this back and even bring in, well, this is just one big sideways mishmash for quite some time. And look, there's a huge move from early in 2020 to the March 2020 low, but the whole trend over time, which you get a sense of by looking at the slope of the moving averages, just tells you there's nothing there. So there's no real big here. There is some support at 132 and change, where it kind of bounced there with the 50-week moving average. I wouldn't give any real meaning to this 50-week per se. This is big long range, big range. If this got down near 120, it's probably a buy again, but in between here, there's just nothing to do. Goldman Sachs. I own this name too. Thank God I own this down from 200-ish. I think, where did I buy this? I don't remember. I think I bought it here against the, so it's even better than 200. Somewhere in here I got long, and I've sold some, and I still have the rest, and I'll be watching this 384 level and how the market reacts to it. It is disqualified if it breaks here this week, because last week was a lower close than the prior week. But I'm going to probably focus around this area because it's where these highs were too. Otherwise, we go back down to 350-ish, and I don't want to see that without likely taking profit. So I'm going to pay a lot of attention to this 384 level. 3M. There we go. Right away, look at the flat 200 and the flat 100. We're underneath 2 of the 3, 2 are flat, the same type of thing, no real trend. Why do I pay attention to these 9 counts along with the 13s? Out of nowhere, we call the bottom here. Out of nowhere, you can essentially get a sense that this is probably a near-term top. Look at the MACD is progressing to the downside. We've actually broken underneath The zero line here, that's not particularly good. We haven't been beneath the zero line on a downward move since back in early 2020. So this industrial name, by the way, take a look, 13, what is that, 1 week or 2 weeks before the all-time high. Sells all the way down, but the only time that you actually configure the bottom was on a 9 count. And now we made a 9 up, that topped it, and we've pulled back. So at a minimum here, we're only on a 6 count this week. I'm gonna probably wait another few weeks before I consider coming into this. And it really depends on how it and what it does here in the low 170s. What do we got? CAT. Okay, CAT's gone sideways pretty much since this 9 count here. We've just hit the propulsion exhaustion level on the downside. Let me blow this up here. No, actually, sorry, here's this week's bar. So we gapped, we're beneath the TDST line. It's not qualified, but that's not particularly good. My guess is there's still downside here. And that we're gonna place, my guess is we play somewhere down in here. Let's see if the cloud helps us at all. Yeah, so notice the bottom of the cloud happens to be where the 100-week moving average is. So if you're looking, 169-ish is a better place than 188-ish where it is now to consider if you want to look to buy it. Dow Chemical, prior all-time highs, we're kind of right there. There's some support between 54 and 55 and a half-ish, right around where we are. It's a place you could consider a minor long. So let's just, yeah. And you also do a Fibo from the 2020 low to the all-time high and see what that says for support levels. Walgreens, here we go, Walgreens Boots. Bottom in 20, I know this was in October, not the March 2020 bottom. But there's, all right, hold on a sec. Let's bring in a little more data because we can't get it. Okay, so this has been selling off. This is. All right. Long bear move that found its bottom, pulled back. So as long as we stay above 43.80 or so, then I think this bottom down here is safe. But look, you got to, negatively slope 200-week moving average. That's not a very good thing, but I may nibble near just under 44. And the last one, because we did this, folks, 30 and 30, is Travelers. And Travelers double top. Oops, sorry. So double top here, maybe even want to call it a triple top. So it's been going sideways. Look for this to test, down near 144-ish over the next few weeks. At that point, it's also going to be the top of the cloud. If that gives way, and notice the 100-week and 200-week are at the exact same level. And that you don't see so often. So that would be the next level down. On the upside, 172-ish is next resistance. That is it. I hope you enjoyed the show. This has been Rick Bensignor and In the Know Trader.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.